Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar swung on headlines but ultimately steadied after the Federal Reserve cut rates by 25 basis points as widely expected, taking the federal funds now to 3.75% to 4%. The move was widely expected. What wasn't, though, was Chairman Jerome Powell signalling that this could be the final cut of the year, warning the Fed is operating with limited visibility as the ongoing US government shutdown blocks key economic data releases. Powell noted policymakers wouldn't continue easing if they're flying blind without upcoming employment and inflation figures. A message that cooled expectations for further rate cuts and limited the Aussie's upside. Meanwhile, Donald Trump is expected to meet Chinese President in South Korea, and let's see how the market plays towards that. There's still a lot of tension there, but looking to the technicals, we can see that the improvement is to the upside after the whipsaw price action and looking back towards 66 cents. A clearance of there, and I still feel there could be an extension onto 66.5 and reassess just in case we get profit taking like we saw back here in September. The euro very whipsawed following a slightly hawkish Fed. Nevertheless, once we start getting some of the data coming through, then we most probably see a weaker US dollar. Overall, though, all eyes will be on the Thursday's ECB meeting, where policymakers are expected to keep rates unchanged. All eyes will be on the core PCE index on Friday, but with the US government shutdown could delay the data. Looking to the technicals, I am still bull and keeping an eye on this RSI. If we do get a break to the upside, then I still have the call to 117.5 and reassess, and with a base holding around 115.60, 70. Well, you can't keep a good ball down, as I would say, as it's back to the top side and waiting for another track to be released. And if so, then I anticipate the move from this 153 area back towards this bottom side, which could, if rejected, the double top potential from the base could give us a measured move. But we will need to see that break somewhere around 149.5, and if so, all cheers will be for the bears as it plummets. Sterling rebounds off this bottom side somewhere around 131, 40, 60, and now potentially I feel could rally and therefore look back towards 133 to 134. Commodities very weak and looking still pressuring the downside as it looks towards that key area seen at 3,888 to 3,900. If that level does hold, we could see a bounce, and that is back towards 4,000 as a potential call and reassess. Wrapping up with oil, the market is still hanging in there, but I still believe the market may pressure the downside. That could find a bear trap and see a rejection from 59.60 and look back towards 62.5. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report, and I hope you enjoyed the great start to the day.